Welcome to the Selling in the Motor Trade podcast, in association with Simco Training. This is the weekly podcast where we share best practice, tips and ideas on how to sell more cars, improve your service department, and generally put more profit into your dealership or dealer group. I'm your host, Simon Bowkett. Now, some of you probably already know me as Skippy. I would start by saying thank you for taking the time to listen to this podcast. Hi, and welcome to another episode of Selling in the Motor Trade. This is going to be another one of those episodes that sales managers, business managers, transaction managers, showroom managers, whatever you're called, someone who's dealing with selling finance in a car dealership, this is one that you really want to not just listen to, but maybe share it with your sales people. Because I was in a dealership a week ago, and a business manager, great business manager, said to a salesperson, how are they funding the car? Directly, how are you funding the car? And the salesperson said, no, they're cash. And you know what? The salesperson believed that the customer was cash. Now, here's my theory. Because that salesperson hears from their manager all the time, how are they funding the car? How are they funding the car? My concern is that our sales teams go out directly to customers and say, how are you funding the car, Mr. or Mrs. Customer? That's one of the worst things I think you could say, because so many customers still in 2026 say cash. You think, why do they say cash? I think they say cash because they think they're going to get a better deal. It's almost been ingrained into us from such an early start in life. In fact, if you get a plumber, a electrician, someone comes to your house and does some work, how much for this job? That's going to be $1,500. Mate, how much will you do it for cash? You know what? That electrician might say, all right, I'll knock a bit off because they'll put the cash in their pocket and won't pay tax on it. Do you think our dealerships, our PLCs, the businesses can take that 80,000 euros and just put it in their pocket and walk away? No, they can't. But then sometimes I was in Ireland and some of the credit unions will say, get your loan from us and then you're a cash customer. You might get a better deal. Now, my understanding in lots of countries around the world, and of course, this podcast deals with lots of different countries. So if you're sitting there thinking, hold on, the UK, we can't do it that way. Listen, people listen to this in Canada and Ireland and Australia. So we're trying to be all things to all people here, but please be careful. Make sure you check the legislation in your state, your country where you're working. But still, the principle, don't just say, how are you funding the car? I still think lots of people are going to say cash. They feel like they're going to get a better deal. I know in lots of places, it's illegal to give a customer a better deal if they pay cash. Actually, if we dig into it even more, it's actually a little bit silly because most of the time we make some commission when we sell finance. But actually, the customer might get a better deal if they say, well, actually, I want to finance it and I want all your insurance products to tell me as well. Okay, because the sales manager might look at the whole deal and go, you know what? I might do a skinnier deal on the metal because all of these value-added products. But again, it's that question. Don't ask how you're funding the car. Now, don't take it the wrong way. I can hear some of you guys yelling at the radio there. You're going for a run in the treadmill saying, oh, no, we got to ask that question. I'd like to know how the customer's funding the car. Of course I would. Let's just change the wording. Why don't we just look at the customer's car with a customer and say, hey, Mr. or Mrs. Customer, how many payments do you have left? Or, hey, when's your next payment due? Or if you're selling PCP in your market, hey, what's your guaranteed minimum future value? Or when is your guaranteed minimum future value due? Or whatever it's called in your franchise, okay? Your minimum future value. When is that due? You see, each one of those simple phrases assumes customers have borrowed money for their car. And if they've borrowed money for their current car, guess what? They're probably going to borrow money for their next car. Okay? So they're just some of the questions I like to ask. How many payments do you have left? Hey, when's your next payment due? Or when's your guaranteed minimum future value due? Now, if they say, oh no, I own it outright. Again, I might even still go down the assumptive route. Oh, great. What were your payments when you bought the car? Okay. Now let's explore that. If you're selling some sort of PCP, okay, a personal contract purchase or personal contract plan, your customer might know what it is because they've seen it on your manufacturer's website and it's all advertised there, okay? But if you get someone who doesn't, you might go down a simple route of, oh, listen, that's something most of our customers have. We give them a minimum price of what the car's going to be worth in either 3 or 4 years' time. Hey, Mr. and Mrs. Customer, would you like me to give you a minimum price what your car's going to be worth in 3 or 4 years' time? Very hard to say no to that. Great. What we'll do is we'll find out the exact model of Tiguan you're interested in. Then my boss, a lady called Claire, has got a computer in there to work out the minimum price of that car in either 3 or 4 years' time. She then simply deducts one from the other, works out the figures and smaller bit in between. Most people just fund part of the car they're getting used to nowadays, not the whole car. Okay. Now we're getting into the customer's psyche that, hold on, that's what everyone else does. Everyone else is doing it. Maybe I should go and look at it. And again, if you've been through any of Simcoe's training, you know we're a huge advocate of the Foursquare deal presenter. This is a menu selling where we offer every product to every customer every time. Go down the assumptive route because you'll be amazed how many times customers say, oh, what APR is on that payment? And someone that was pretending to be cash beforehand. That's the first thing we do. So business managers, sales managers, don't say directly to your salesperson how they funded the car. Use the same wording you'd want them to use with the customer. Okay? Just turn around and say, how many payments have they got left? When's their next payment? Good. Okay? When's their guaranteed minimum? Or how much is their guaranteed minimum future value? If you start wording it that way every single time, guess what? Monkey see, monkey do. That might be a bit patronizing, but your salespeople start asking that in the right way. And that in itself, you'll get a lot less people saying, or a lot less salespeople say, oh, no, they're cash, they're cash, they're cash. Now, you might say, well, do I really need to do that? On this Foursquare, it's just going to put the deal in front of people anyway? Yeah, I think you do. Because I think more finance deals are lost through the face saving because customers have told you I'm cash. How they come around and say, actually, you know what? I said I was cash because I think I'm going to get a better deal. But now let's look at the finance. It's going to be a bit hard to do that for some people, okay? Because customers' egos, they might work there. Now, here's something else you might want to consider. If a customer says, oh, it's cash. I was taught many moons ago, and there's some good psychology around this, and say, hey, what are your current payments? Oh, it's £500 a month. Great, this time you want to go up to, and the up to, that's actually called a probe, a type of question. And you'd expect someone to say, well, I'll go up to 600. And for the right card, you might stretch to, like this month in 2026. I'm not going to do that at all. Because here's my big concern. And this is where I sat down in the studio. I want to talk about this particular point. Okay. That may have worked a few years ago, but in 2026, when I'm recording this, think about what inflation has happened in the last 3 years. Think about the price of your holiday 3 years ago to what it is now. Okay. What you're paying for fuel. Okay. What you're paying for energy in your house. Okay, inflation has gone through the roof over the last 3 or 4 years. Okay, lots of reasons why. Okay, and I think that's pretty much most countries that listen to this podcast. Inflation's gone through the roof. So a little phrase you might want to use with customers is pre-inflation. So it might roll something like this. We're looking at the customer's car. And we might say, hey, Mr. or Mrs. Customer, how many payments have you got left? Or when's your next payment due? Or, hey, what's your guaranteed minimum future value? Okay. If they say, well, I've got 4 payments left. Cool. Okay. And how much are your payments? $500 a month. Immediately, I'm going to go straight into, great, 500 a month. That's 3 years ago. I suppose with inflation now, that's more like 650 at the moment, isn't it? So this time you want to go up to, can you see how we use the phrase there, conditioning? Okay. Now that's pre-inflation. With inflation, that's more like 650 at the moment, isn't it? So this time you want to go up to, because I tell you what, if you don't do something like that, if you say to a customer, what are your current payments? 500 a month. This time you want to go up to, oh no, I wanted to keep it lower because the cost of living, it's going up. And you know what? You got no chance of getting a customer in a similar vehicle that they bought 3 years ago to keep their payments kind of lower than what it is at the moment. Now, of course, it depends on if they're on a lease or a PCP and what deposit they put in. I know all those things. Just try this one, okay? Hey, what are your current repayments? 500 a month. Right, okay, that's 3 years ago. So with inflation, that's kind of like 650 at the moment, isn't it? This time you want to go up to, I love to have that conversation early on when we're looking at the customer's trade in, because actually at that stage there, okay, they're more likely to open up because they're trying to sell their car to you. Don't wait for this conversation to at the end of the demonstration drive. I like to tie it in as part of my qualification to make sure we're not got the customer on too much car for their budget. Now, there will be some people say, avoid the monthly budget question altogether. And gotta say, I think there's a lot of merit in that as well. If people have done 19 hours and 42 minutes of research, you could actually come to the same conclusions by saying, hey, Mr. or Mrs. Customer, there's 3 or 4 different models of Tiguan. Which one you've been researching online? Oh, it's the bling bling model. Hey, great. What's about the bling bling model that put it on your shopping list? Okay. And then, hey, listen, how far did you get away with the, along with the configurator on that bling bling model? If they answer that they have, and they want it in the iridescent snowflake color and the retractable tow bar, they've been on the website. Don't most manufacturers' website have some sort of finance calculator, some sort of offers there? Let it be the bad person and tell people that, hold on, that Tiguan, you had it 5 years ago for 500 a month. It's easily going to be 750 now because they've had a look at it there. But let's go one stage further. Do you have salespeople that believe we might be expensive on finance? Are we expensive on finance? You get lots of salespeople. They really do believe that you're expensive. Now, mainly on used car finance, not new car finance. But is that really the case? Now, again, this is where you need to talk about what country you're in, because there's lots of variations out there, okay? But in the UK, we have one finance rate we need to offer customers. We need to treat customers fairly. So your finance rate on used cars might be 12.9%. But the customer's been to AA Car Finance online. They've been to Marks and Spencer, Tesco's Finance, okay? Before you start talking about all the banks out there and HSBC and what they're doing, and they might think, goodness me, 12.9, they're kidding themselves. I've seen this advertised for 8.9, 9 point something. And that's again when our customer is going to say, you know what, I'm fine. I've got that sorted there. Here's my concern with that. 2 things. Our salesperson now believes we're expensive. Are we expensive? This comes back to where I was last week. I had a salesperson, good salesperson, not a bad person. Also, the business manager in this particular dealership honestly believed we're expensive. Now, this dealer group that I was in, I said, great, expensive compared to, and they mentioned some of these different places. I said, let's go and have a look. So I clicked on a website. If you're in the UK, go to AA Car Finance. And I'll say you can get used car finance on a calculator from currently, and this is 2026, it's actually from 9.9% APR. If your credit score is excellent. If it's good, it goes through to 12 point, I think it was 12.9. If it goes to fair, it goes through to 14%. Now, here's my real concern with that. With AA Car Finance, what's the only way you can find out what interest rate you're going to get as a customer? Yeah, go and apply for the loan. So when we get into that rate conversation with the customer. When a salesperson gets into that rate conversation, what's your APR? So many times we lose that battle because of what customers are seeing effectively advertised. Now, I know in some countries you have to have a representative APR, an average APR. In Canada, I think they call it that. Okay. Don't quote me, people in Canada saying, no, it's not called the average APR, whatever it is, but some sort of representative APR. But my concern is customers' egos. It's like asking any man, are you a good driver? How many of us as men say, yes, I'm a brilliant driver? But are we all going to be as good as Lewis Hamilton? So what happens is the customer does their research, 19 hours and 42 minutes of research. You type anything into do with cars into any search engine, up pops lots of different things for the customer to look at. They see finance offers on AA car finance. Sorry, AA, we're going to pick on you now because that's the one I looked at just last week or the week before, I think it was. Okay. And the customer goes, it's from 9.9. If you're currently at 12, okay, customer's thinking, you know what? I'm fine. We're not going to deal with that. It's only if they apply. But when can a customer come back and say, well, I'm sorry, I don't qualify for the rates at 9%. I've got that 14% because I'm actually shitter finance. No customer's going to do that. Their ego can't talk. And it's not just AA car finance. There's lots and lots of these people that have these finance calculators on it. In fact, I was in Ireland and they have Bank of Ireland. Okay, it's got in fine print. It's always in fine print. Their advertising rates there at, I believe it was 7.9% APR. Okay, it says in fine print. Okay, this is from 7.9%. The actual APR will be worked out once you have, I don't know, applied or something like that, based on your individual circumstances. And Ireland, we can't find anywhere on the Bank of Ireland what the average APR is. They don't have, and some of your countries, they call it rates for risk. They'll give a different rate depending on the customer's specific risk. But put yourself into your salespeople's shoes. They're the ones that are sitting there thinking, goodness me, we're expensive. Okay. And that's when you'll end up with your salespeople saying, are you looking at finance or, okay, well, I can get it elsewhere. What rate? Yeah, okay, you'll probably find that because honestly, most salespeople just want to sell the car. They're not concerned about you as a business manager or the business. So we've got to make sure our salespeople don't believe we're expensive. To business managers, heads of businesses, go and do the exercise with your salespeople. Okay, go and show them it's a from APR. Okay, go and show them your representative APR. Go and show them so many times. Okay, the examples that look like a really low rate is a big old chunk of money over a long period of time. You bring it back to the smaller chunk of money that the customer's borrowing from your dealership. Watch how that interest rate changes. Okay, so let's talk about the egos. And this comes back to our mate Neil, who works with us. Okay, he's got a different approach. And I quite like this for a customer who says they are cash. Okay, let's not have an argument with the customer. Okay, we might talk to the customer and say, looking at their car, how many payments do you have left? Or when's your next payment due? Or what's your guaranteed minimum future value? Customer says, no, it's a cash offer. Sorry, it's a cash for me. My mother always said, if I can't afford it, don't buy it. Or you might want to try this approach. This is one for a guy called Neil works for us. He'll turn around and again go down the assumptive route. He'll turn around and say how many payments you have left on your car, when's your next payment due, or what's your guaranteed minimum future value. He'll wait till people say, oh, no, it'll be cash for me. My mother always said, if I can't afford it, don't buy it. Well, he won't have an argument with the people. He'll say, hey, that's no problem. I'll get Sarah, our business manager, to work out a cash offer for you. So you're starting to work with the grain. He might say something along the lines that it might be the best option for you. Okay. There's no resistance there. But tell you what, I'll get Sarah, our business manager, just to sanity check it, just to make sure you're getting the best deal you can. Or I'll get Sarah, our business manager, just to check to make sure you're getting the best offer you can, okay? The best deal you can there. Again, there's hard to get resistance from the customer on that one. Now, when a customer says, no, it is cash for me, okay? My mother always said, if I can't afford it, don't buy it. It's always put me in good stead. Let's make sure it is cash and not a bank conversion. So we're going to start off by saying, well, what Neil says. Neil works for us. He'll say, yeah, that's no problem. I'll get Sarah, our business manager, to work out a cash offer for you. There's no resistance, okay? He might say something along the lines of, hey, that might be the best option for you, okay? But then he'll turn around and say, hey, but listen, when you're talking about cash, are you talking about your own savings or external lender? Because there's some really good offers out there at the moment. When I first heard that, I thought, okay, Neil, why are you telling customers there's some really good offers out there? He said, well, Simon, don't be silly. 30 seconds earlier, they were telling you they're a cash customer, okay? So you've got to almost stroke the customer's ego, because it might be their ego that was talking that said it'll be cash for me. So I'll tell you that one again. He'll turn around and say, hey, that's no problem. I'll get my business manager, my boss, to work out a cash offer for you. But listen, when you say cash, are you talking about your own savings or external lender? Because there's some really good offers out there at the moment. Notice how Neil didn't use the word there's some really good rates out there. He never said that. There's some really good offers out there. He stroked their ego for them to give the customers the ability to say, well, yeah, I am looking at external lender. Great, no problem. I'll tell you what I'll do is I'll get Sarah, our business manager, just to have a look to sanity check it, make sure you're getting the best deal you think you can. Okay. And listen, what I'll do is I'll get my boss just to have a look at it, make sure you're getting the best deal you can. Again, he's avoiding the word rate there. Okay. He'll do that early on, looking at their car. No resistance, no fighting. But before we put a deal in front of people, he might just say, oh, by the way, that external lender you're looking at, how much were you looking to borrow? 50,000 euros. Okay. Over what term is that? Okay, 48 months. Okay, cool. Right. Oh, by the way, how much was that working out a month? Right, 600, whatever it is. Okay, cool. And that's the information he'll give to the business manager to stack a deal. In fact, we don't care where the finance is coming from, which credit union. We don't care what rate it is, because you might lose out on that. Okay, and again, the customer might not have actually got accepted on the rate. And if you're up against a credit union, they're probably not going to be offering a PCP. Sure, it might be hire purchase with a balloon, but it's not a PCP with the full ability to return the car, retain it, or renew it. They're the three different options there. So that last bit there, I'll just run through it very quickly. He might just turn around and say, assumptively, how many payments you got left? When's your next payment due? What's your guaranteed minimum future value? No, it's cash for me. Okay, no problem. I'll get my boss to work out a cash offer for you. Okay. But listen, when you say cash, are you talking about your own savings or external lender? Because there's some really good offers out there at the moment. Now, without saying there's some really good offers, it doesn't work. You got to stroke their ego. Give them the ability to say, yeah, I'm going to look at an external lender. Okay. So what I'll do is I'll get my boss to have a look at it, just to sanity check it. Make sure you're getting the best deal you can. Okay. And then before we get the deal, oh, by the way, how much are you looking to borrow? Whatever the number is, doesn't matter. 50, 60, 70,000. Cool. Over how long is that? 60 months. Okay. And how much a month is that working out at? Because that's the three pieces of information you need as a business manager to be able to stack a deal. Maybe get them into that leasing product, that PCP product, and show them what we can do that actually the other people can't do. Then we can get into the technical stuff like tri-party agreements, first line of funding, why we've got halves and thirds. I didn't want this to be a whole finance options and talk about all the advantages and disadvantages of funding through a bank, a credit union, or by car dealerships. That's probably a more in-depth one that we talk about our value-added training process and our courses and all that sort of stuff. This one was just more about letting the customers open up, keep an open mind to that Foursquare, the deal stacker, when you put the offer in front of people, instead of them digging their heels and going, no, it's cash for me. So anyway, try some of these ideas, see how they work for you. And we'll see you next time, which, by the way, the interview we got at next week, I think you're going to be real impressed with. This is a legend in the automotive management space in the UK. This guy has, I think you'll be very, very impressed when we work out who it is and the business is, I will say, that he's built. And we'll see you then. That just leaves me to say that all details of this episode and other episodes on the selling in the motor trade can be found on our website, simcotraining.co.uk. Go there to get a copy of our book, Words That Sell Cars. Go there to sign up to a free trial of our Sales Fitness online sales training program. Easiest way to get hold of me is Simon Bowkett through LinkedIn. Thank you.